Hi everyone. So this is the final part in terms of the inventory subtopics. So at this point, dapat you're done now with inventory inclusions. Number two, you're done with cost flow method. So the last and number three, you're done now with the LCNRV. So the last two topics would be for estimation methods and errors. So like what I mentioned, let's just recap the five subtopics. So number one, ang context ng inventory inclusions is that at the end of the period, regardless kung perpetual or periodic, you have to create a count. So usually you have an accountant. Now that accountant is faced with numerous different types of goods. Merong mga goods na nasa warehouse, may mga goods na either palabas ng warehouse or papapasok. So these are your goods in transit. So, pag goods in transit, the question is, which ones should you count? And basically, the idea lang naman talaga behind it is that during that physical count, what should be included will be anything that is owned by the company. So, anything that is physically in the warehouse and may ownership ka. So, other things to note there would be consignment, kahit na pinabigay mo sa customer, as long as you pass the legal test. Meaning, as long as you own those goods, then that would form part of your inventory. So in inventory inclusion, the subtopic one, isa lang yung hinahanap. And ano yung hinahanap doon? What is the correct inventory balance for that period? In the second subtopic, ang pinag-uusapan naman natin is cost flow. So you will have different assumptions. And bakit lumalabas yung mga different assumptions? It's because whenever you purchase batches of inventory, minsan nag-iiba yung price of each purchase batch. And therefore, you will have to come up with different assumptions. So it could be specific identification, FIFO LISH, LIFO fish, or wave. And out of those four, yung tatlo, iba-iba yung way of solving kapag perpetual or periodic. But in the second subtopic of inventory cost flows, dalawa lang usually yung hinahanap. What is your cost of goods sold and what is your ending inventory? That will both be derived from your cost of goods available for sale. And then in number three, in LCNRV, the scenario naman is, tapos na tayo sa cost flows, tapos na tayo sa inventory. After mo ma-initially recognize lahat ng inventory, ang question is, how do you subsequently measure them? And the answer is, it should be the lower of either the cost or the NRV. So, importante naman doon would be knowing the definition of NRV. So, net realizable value is equal to estimated selling price minus estimated cost to complete minus estimated cost to sell. So, ganun kayo mag-solve. So, regardless kung ano ibigay sa inyong kakaiba, like mga repair cost, ganun. The important definition is NRV, tapos pipiliin nyo lang which one is lower. Yung cost ba or yung NRV? This brings us to the last two subtopics. We have estimation methods. So, knock on wood, sometimes, imagine nyo, you're running a company and there is a act of God or there was a catastrophe. So, mayroong fortuitous event. So, that's what we mean. Parang there's something that was unexpected, hindi mo inakala. And sometimes, you need to estimate the value of your inventory. Why? Because sometimes your inventory, what if nagkaroon ng sunog sa warehouse? What if may nanakawan? Someone stole it. So now, hindi ka or gusto mo, hindi ka makapiniwala dun sa physical count, you want to test kung tama ba yung bilang natin? Or kailangan mong gumawa ng interim financial statement. So, hassle to actually conduct a full count if you're making interim financial statement. So again, if there are acts of God like destroyed by fire or nawala yung inventory na hindi ka makaka-physical count, or you want to test the reasonableness of your physical count, or you want to make interim financial statements, that's the time you need to estimate the value of your inventory. Now, in terms of estimating the value of your inventory, ang isa lang naman yung hinahanap. How can we estimate our cost of goods sold so that we can estimate the ending inventory? Bakit muna? So, step 1, get our ending inventory, estimate it. Step 2, subtract our estimated cost of goods sold from our cost of goods available for sale so that we can get the ending inventory. And what is our two methods? We have our gross profit method and we have our retail inventory method. Okay, so there's two ways to value. Let's go to gross profit method. So the gross profit method, the idea is, let's first look at our beginning inventory. Ang ginagawa natin is we use the gross profit rate. So ano ulit yung gross profit rate? Gross profit over net sales to estimate our cost of goods sold. So basically, the idea lang is we apply the gross profit rate to our net sales so that we can get or use that to estimate our cost of goods sold. So in summary, for gross profit method, we know cost of goods available for sale. We want to solve for EI and COGS. So ang una muna natin isi-solve rather than ending inventory is si COGS. And then COGS minus COGS is equal to ending inventory. So, something to note is that yung gross profit rate mo has two types. So, gross profit rate, ang base niya is gross profit over net sales. Now, meron siyang based on sales and based on cost. Meaning, when you say based on sales, it's a percentage markup on sales, while on based on cost, it's a percentage markup on cost. So, ano lang yung maiba? Sa X percentage markup on sales, ang 100% natin is si sales. So, ang COGS is 100% minus X%, and ang gross profit natin is X%. On the other hand, for X% markup on cost, pag based on cost, ang COGS natin is 100%. So, mahirap siyang isipin, right? So, let's look at an example. Let's say nakalagay 60% gross profit rate based on sales. So, what would that look like? What that would look like is that ang 100% natin, what that would look like is that yung 100% natin is the 1,000. So, what will happen? If it's 60% our gross profit rate, ang ibig sabihin, ito, this one, is 60%. Right? So, what that would mean is that 60% mo is yung gross profit. So, gross profit based on sales. 60% of the 1,000 is 600. And 40% mo is cost of goods sold. So, ano yung 100% natin? Ang 100% natin, as it suggested, is sales. So, ang net sales natin is 1,000. So, that's 100%. And therefore, ang 60% based on sales would be 60% of 100. So 60% times 1,000 is 600. And we'll be able to get our gross profit. And therefore, from there, may estimate na natin yung COGS. If 60% si gross profit, our COGS would be 40%. And therefore, we'll be able to get our cost ratio. So, based on sales or percentage markup based on sales will give you what you call your cost ratio. And cost ratio is just gross profit. So net sales multiplied by your cost ratio is equal to your COGS. So cost ratio is just basically 1 minus your 60% or gross profit rate based on sales. So itong 40% na to is our cost ratio. So to get your COGS, you get your 40% cost ratio multiplied by your net sales. So 1,000 times 40%, mabibigyan ka niya ng COGS. And we're done estimating COGS. So first side, on the left, yung first type of gross profit is based on sales. If it's based on sales, So pag based on sales, it will give you your cost ratio. And how do you get your COGS using the cost ratio? 1,000 times 40% na cost ratio is equal to 400 COGS. Let's go to the other side. What if 60% gross profit rate based on cost? Ang ibig sabihin, we're gonna follow this. Ang 100% is yung COGS. So if you look at it, ang 100% natin, ang 100% natin is the cost of goods sold. So 100%. Meaning, yung 60% is 625. So how did I get 1,000? It's basically 625 times 1.60% gross profit based on cost. So naging 1,000. So now, if 100% natin is COGS, itong net sales is comprised of the 60% gross profit, the 100% COGS, and now 160% si net sales. So, X percentage of markup on cost, ang 100% is si COGS. Therefore, yung 160% na yan is what you call your sales ratio. So, what we do to get our COGS would be net sales divided by your sales ratio is equal to your COGS. So, let's see. $1,000 na net sales divided by 1.6 or 160% is 625. And dun mo makukuha si COGS. So as you can see, same yung net sales natin, but depending on the definition, nag-iiba yung cost structure. Again, so to repeat, there are two kinds. You have a gross profit based on sales. Based on sales. When we say gross profit based on sales, yung percentage markup is on the sales. So, ang 100% natin is yung sales portion. So, ito yung 100%. 60% means that yung 60% will be your gross profit. And therefore, ang gagawin natin is, pag based on sales, we first get our cost ratio. And that's basically, kung 60% yung gross profit mo, 40% yung COGS mo. So, pag 70% yung gross profit mo, 30% yung COGS, yung cost ratio. So, to solve for COGS, it's just basically net sales of 1,000 times the cost ratio of 40%, it will give you your cost of goods sold of 400. On the other hand, if it's based on cost, ang 100% natin is the cost of goods sold. And therefore, kung 100% to, we know that net sales is higher. So 60% gross profit is still 60%, pero ito 100%. So ang net sales natin is COGS plus gross profit is 160%. And this is what you call your sales ratio. And yung sales ratio, you get the COGS by net sales divided by sales ratio is equal to your cost of goods sold. And therefore, yun yung two types of estimating under gross profit method. So, let's take a look at another example kasi that's just illustrative. So, pasadahan ulit natin. The following data relate to the records of Powell Corp for the month of September. You have sales of 60,000, beginning inventory of 20. Purchases of 180,000 and goods available for sale for 200,000. So again, one of the things na gusto kong itaga sa inyo is that it's net sales. So ito, sales lang yung binigay. Pero if ever binigyan kayo ng sales return, sales discount, it should be net sales. So sales minus sales discount minus sales return and allowance. So let's do it. First is, what if 50% markup on cost? So 50% markup on cost. If our net sales is 160,000, ano yung 50%? The 50% would be the gross profit. So alam natin 50% to. The next question is, since it's based on cost, ano yung 100% natin? Ang 100% natin, dalawa lang yan. Either 100% is the net sales or the COGS. But dahil based on cost, ito yung 100%, yung COGS. So therefore, ang 100% natin dahil based on cost is yung COGS. Now, ano yung net sales? Well, we know that COGS plus gross profit is equal to net sales, and therefore, our net sales is 150%. Dahil based on cost to, what it gave us was our what? Our sales ratio. And if this is our sales ratio, we can now determine ano yung cost of goods sold natin. Our cost of goods sold would be 160,000, which are net sales, divided by 150% sales ratio is equal to our COGS. And therefore, our COGS would be 106,667. So let's do that. So net sales, 160,000, 160,000 divided by 150% or 1.5. 10667. So, with that said, 160 to, so COGS, so ang gross profit natin would be 533,333. So, 160 minus 1066667 is 53,330. So when we test this, yung gross profit of 50%, it should be 53333 divided mo by 106. 106,667 is equal to 50%. Right. Let's move on to 60% markup on sales. So again, it's the same. You still have the net sales of 160,000. But now, dahil markup on sales, ano yung 100% natin? Well, first thing is, we know that 60% is gross profit kasi 60% markup on sales. Now, the 60% markup on sales, dahil sales, ang 100% natin is net sales, and therefore, ang COGS natin would be 40%. So this is a 40% cost ratio. So yung 40% cost ratio, we multiply by 160,000, which is net sales. So that will give us 64,000. So to prove, $160,000 times 40% or 0.4 is 64,000. And therefore, ang gross profit natin is 160 minus 64 is equal to 96,000. And to just test kung tama ba yung gross profit rate natin, it's gonna be 96 divided by 160 equals 60%. So, ang COGS natin, pag 50% markup on cost, would be 106,667. And pag ito, cost ano naman, based on sales, is 64,000. So, to summarize, yung first step is, ano ba siya? Markup on cost. Dahil on cost, ang 100% is si cost. Dahil alam mo naman na gross profit is 50, 100 plus 50, 150%. But dahil on cost, what it will give you is sales ratio. And you just do net sales divided by sales ratio is equal to COGS. On the other hand, if it's based on sales, ang 100% mo is based on sales. 60% is yung 60%. So kung 100 to and 60% to, this will give you your cost ratio, which is 40%. Then you go net sales times cost ratio is equal to cost of goods sold. So ganun lang siya mag-work. It looks complicated, but if you just memorize and also do it yourself, magigets nyo na pag markup on cost, I will get sales ratio. If it's markup on sales, I'll get cost ratio. And basically, net sales divided by sales ratio is equal to COGS, or net sales times cost ratio is equal to COGS. And magkaiba lang siya ng definition. So please be careful and do the other exercise so that you'll have more appreciation for this. So, in essence, pag based on sale, you multiply by cost ratio. Pag based on cost, divide by sales ratio. So, again, our 4 steps would be, number 1, create your gross profit equation. Understand where your 100% comes from. So, if it's on cost, it's on cost of goods sold. If it's on sales, it's net sales. Then, you get either your cost ratio or sales ratio so that you can solve for your COGS. So if it's based on sale, it will give you your cost ratio, and you multiply your net sales by your cost ratio to get your cost of goods sold. If it's based on cost, it will be, gives you your sales ratio, and net sales divided by sales ratio is equal to your cost of goods sold. So, dahil alam mo na yung cost of goods sold, and you know that your COGS is 200,000, you can now get your ending inventory na 200 minus 106,667 is 93,333. And yung 200,000 minus the COGS of 64,000 will give you your ending inventory 436,000. So, ito lang yung framework na aaralin nyo for subtopic 3, the estimation 1, which is gross profit. Tatandaan niyo lang na if it's based on sale, the 100% will be on your sales in terms of your gross profit equation. And eventually, you'll be able to derive your cost ratio. And to get your COGS, it's just net sales times the cost ratio of 40% will give you your cost of goods sold at 400. On the other hand, if it's based on cost, your COGS will be your 100%, and then it will give you your sales ratio, which is a figure that's above 100%, so 160%. So net sales of 1,000 divided by your sales ratio of 160% will give you your cost of goods sold at 600. So that's one way of estimating the cost of goods sold. So now let's go to the estimation method number 2. So using retail inventory. And ang importante to note about the retail inventory method is that right now, before, we're looking lang at the cost. But as the name suggests, now we're going to be using the retail price. And if you've been shopping, you know that the retail price is just another way of saying selling price. So the idea lang here is that since hindi natin maalam paano mag-estimate, we will use everything at retail. So we're going to go through the cost flow using the retail prices, meaning the selling prices. And then we have to find a cost ratio, meaning how do we turn our retail prices back to our cost? And then, using that, we'll be able to get our ending inventory at cost. So, yung cost flow will give you something like this. You will solve your COGS the same way, whether it's cost or at selling price. So now that you have your goods available for sale at retail price, ang isusubtract natin rather than COGS would be our net sales. Kasi at least alam natin what the net sales would be. And then therefore, we will get our ending inventory at selling price. So at selling price. So the last step na lang is, how do we get our ending inventory at sales price all the way back to yung cost? So how to do that is by multiplying what we call our cost ratio. And then that's when we get our ending inventory at cost. So it's hard to imagine, but what I want you to do is look at this example. So pag retail method, alam mong retail method yung pinapagawa sa'yo. If you see that you have different line items, and then dalawa yung columns binibigay. The cost of the goods and the retail price. So you have two businesses, the sporting goods and the jewelry and cosmetic. Now, how do you do this? Or parang how do you analyze? Itong purchases, you purchase this at cost at 675,000. Pero yung retail, ang ibig sabihin, binenta mo to at 1,066,000. So ito, in jewelry, it costs 741,000, binenta mo siya at 1.1 million. So for example, yung beginning inventory, yung cost nito is 47,000, pero binenta mo siya at 74. So of course, the retail prices are higher kasi pinatungan mo ng markup. Same with this. So, the idea is, balik tayo sa basics. We first do or find our COGAS. So, this is our first step. Find your cost of goods available for sale, both under its cost and retail. So, basically, using this information, hindi siya arranged in terms of our cost flow. So, let's start. Beginning inventory muna, 47,360, 74,000. Next would be purchases, 675, 1,066,000. You have purchase returns at 26, ito at 40. You have purchase discounts, pero zero sa retail. And you have freight in at 9,000. With this, we'll be able to solve na if I use all of this and I use all of this, what I'll arrive with would be my cost of goods available for sale. So our cost of goods available for sale would be 693,000 and 1,100,000. So ignoring retail muna. So ignore muna natin to. Ignore mo muna to. How do you get your ending inventory at cost? Usually, we just need to COGAS minus COGS will give you our ending inventory at cost. Right? Ending inventory at cost. Pero ang problema, wala tayong COGS. We can't see any COGS here, right? So, what do we use? Dahil wala tayong COGS, we will first focus on retail. Dahil ito, this is cost of goods available for sale at selling price, what we can subtract instead would be our net sales. So, 1,100,000 minus our net sales of 1 million. And therefore, ending inventory at their retail price or at their selling price would be 100,000. So yung 100,000 na yun is the selling price. So a portion of that is our cost of goods sold. So something smaller. But how do we turn this into ending inventory at cost? Well, the simple solution is to do our cost ratio. And our cost ratio is just basically our COGAS at COGS, at cost, and our COGAS at retail will give us our cost ratio of 63%. Meaning, out of this selling price of 1.1 million, so if it was a pie, ito yung selling price na 1.1 million. Yung cost nito, 63% is the cost. The rest are markup. Right? And therefore, if you do 1 million times 63% or 0.63, it will give you 693,000. So therefore, itong 100,000 na to, which is comprised of your COGS and a markup, how to carve out your COGS, you just have to multiply 100, the ending inventory at retail, times the cost ratio of 0.63. So you have 63. So our ending inventory at cost is 100,000. Ending inventory at retail times 63% cost ratio is equal to your ending inventory at cost. So that is 63,000. So our cost ratio is 60%. So another example. At December 31, the main department store takes a physical inventory at retail. The actual retail values are 95,000. So if our cost ratio was 60%, we just multiply 95,000 times 60% cost ratio is equal to your ending inventory of at cost of 57%. So the idea lang is you get the ending inventory at retail, which is basically at selling price, multiply it by your cost ratio of 60%. So 95,000 times 60% is equal to 57,000. So do it also with me. So step 1, again, retail method. Step 1, just follow your normal cost flow all the way until your COGAS. Pero this time, 2 columns, one at cost, one at retail. So let's see. Beginning inventory, 39, 62. Purchases is 741, 1,158,000. Purchase returns, 12, 20, and then wala yung dito. So, purchase discount, 2,440 and 14. Now that we have that, we get our cost of goods available for sale and using at cost and at retail. So, we have 780 and 1.2 million. From there, dahil wala tayong COGS, we'll just look muna at the retail side. I-ignore muna natin si cost. We get the retail side so that we can get the ending inventory at retail. So ano yung ending inventory at retail? 1.2 million minus net sales of 1.160 is 40,000 ending inventory at retail. We know that the ending inventory at cost is smaller than 40,000. A portion of 40,000 is ending inventory at cost. Now, how do we get that? By multiplying ending inventory at retail. So, multiplying the ending inventory at retail, so the 40,000, times your cost ratio. So, how do we get our cost ratio? To get our cost ratio, it's basically COGS at cost, which is basically 780,000, divided by 1.2 million. That will give you your cost ratio of 65%. So, 65% of this 40,000 refers to your ending inventory at cost. So again, to summarize, it's 40,000 times 65% cost ratio is equal to ending inventory at cost. So now your ending inventory would be 40,000. So it's 40,000 times 0.65 equals 26,000 ending inventory at cost. Lastly, you have yung jewelry cosmetics. So at the end pa after nun, nalaman nila na 44,000 raw yung ending inventory at retail and the cost ratio raw was 64%. So how do you solve that? It's just 44,000 times 64% cost ratio is equal to 28,160. So with that, we're done with estimation method. So again, for estimating, why do we estimate inventory? There are 3 reasons. One, either nasunugan ka or hindi ka maka-physical count at the moment. Number 2 is you want to test the reasonableness of your physical count. And number 3, gumagawa ka ng interim statement. So you have 2 methods, the gross profit method and the retail inventory method. So again, important subtopic. So again, better to understand each subtopic 100% than may kulang kayo. So focus on gross profit and retail inventory. Lastly, we have inventory errors. And for inventory errors, I think this is one of the toughest to understand. But dito matetest yung expertise nyo in terms of understanding the cost flow. So, to simplify, I want us to look at this important case study. So you start off with your beginning inventory. When you add your purchases, it will give your cost of goods available for sale, less your ending inventory of 200,000, which will give you your cost of goods sold. And let's say, for this example, you have a revenue of 1 million. So you can get your gross profit of 700,000 kasi itong COGS na to, pumasok. So 1 million net sales minus COGS, gross profit. And then let's say your OPEX is 200,000. Your net income will be 500,000. So tatlo kasi yan. One is your cost flow that will give you your COGS. Second will be your net comprehensive net income that will give you your net income. And then you have your assets, liabilities plus equity of 800, 300, and 500,000. Right. Now, this is just period 1. So, paano yung period 2? Dahil period 2, so the end of period 1 is the beginning of period 2, itong ending inventory mo of 200,000, sorry, let's just clear everything. Itong less ending inventory mo of 200,000 will become your beginning inventory. And then let's say may purchases ka of 800,000, so naging 1 million yung COGS, less ending inventory of 400,000, you will get your COGS for the second year at 600,000, which you will then use to get your gross profit. So if let's say net sales mo is 2 million, your COGS would be 600,000. Get you see your gross profit of 1.4 million. And then let's say yung OPEX was 400,000, it will give you your net income of 1 million. And then let's say asset, liabilities, and equity. So what I'm just showing you is that a lot of things are interconnected. A lot of things are interconnected. Your ending inventory will define your beginning inventory. That's one. Another would be your COGS will determine your gross profit for each year. So yung COGS, the 600, napupunta siya dyan to determine your gross profit. So a lot of interactions between the three. Your cost flow, your income, and your asset liabilities, and your equity. Now, paano kung nagkaroon ka ng error? May na-understate or na-overstate ka in any of these scenarios. That is where papasok yung inventory errors. So, let's say, error number 1. You have the beginning inventory na understate mo. Ang tamang figure niya or tamang item niya is 100,000. Pero nagkamali ka. Ang nasulat mo is 50,000. What would be the effect? Understated yung beginning inventory mo. It should be 100,000, but now it's just 50,000. It's understated by 50,000. Dahil nagkamali ka sa beginning inventory, let's say, tama pa rin yung purchase, 400,000, 400,000. Pero ano nangyari? Your cost of goods available for sale is now understated. It should have been 500,000. It should have been 500,000, but now it's at 450. So understated rin yung cost of goods available for sale. And then yung ending inventory is 200, 200. Pero here, understated rin si COGS mo. Because mas mababa si 50,000 si COGS, so mas mababa rin ng 50,000 si COGS. So dito nyo makikita yung first interaction. If your beginning inventory is understated by 50, your COGS will be understated by 50, and your COGS will be understated by 50. And then, ano ba mangyayari? Yung gross profit mo, that should have been 700,000, dahil nagiging 750,000. So, overstated yung gross profit mo. Dapat 700,000 lang, naging 750. Bakit? Kasi our COGS is less than 50,000. Ayun no? 300,000 yung COGS dito, ito 250 lang. So, nagkaroon ng chain error. 1 million, pareho lang. 1 million sa revenue, 1 million sa revenue. Minus 250 na understated COGS, tumaas tuloy yung gross profit. So, kahit pareho yung OPEX mo of 200,000, yung net income mo of na dapat 500,000, naging 550. So, ano nangyari? Understated si inventory, si COGS, si COGS. Overstated si gross profit, si net income. And therefore, dahil yung net income mo dictates your equity, kasi tara mo, 500 to, 500 yan. 550 to, 550 to. Overstated rin si equity. So, ano yung effect ng isang mistake? Na understate mo yung beginning inventory in period 1. In summary, ito yung mangyayari. Understated yung beginning inventory mo. Naging understated tuloy si COGS. Dahil understated si COGS, nag-understate si COGS. Dahil understated si COGS, understated yung COGS na sinusubtract mo from 1 million. Dapat 1 million minus 300,000. Ngayon, 1 million minus 250. Therefore, tumaas si gross profit, tumaas si net income, and tumaas si equity. And therefore, this is your first effect. So this is the first summary. If you're beginning inventory is understated, your BI, your cost of goods available for sale, and your cost of sales will be understated. Your gross profit, your net income, and your equity will be increased. So, mahirap i-memorize. So, dapat mas alam nyo yung interactions between each period. Let's have an opposite example. Dapat 100,000 yung beginning inventory. What if nagkamali ka? Ginawa mong 150,000. So now, overstated si beginning inventory. Pareho lang yung purchases nyo. So 400, 400. Pero dahil may 50 tong extra, our cost of goods available for sale is now at 550 when in fact it should have been 500. So overstated rin si Kogas. Dahil overstated si Kogas, kahit na subtract the same amount of 200,000 in ending inventory, overstated rin yung cost of goods sold at 350,000 when dapat 300,000 lang yan. So that's the first effect. Pag overstated yung beginning inventory mo, overstated si Kogas, overstated si COGS. Dahil nagkamali ka sa COGS, magta-transfer yan to your income statement. So 1 million minus 350,000 na, when in fact it should be 1 million minus 300,000. So may extra 50 to. So overstated si COGS. Because of that, yung gross profit nito 700,000, pero ito 650. So understated si gross profit. So kahit pareho yung OPEX mo at 200,000, ang net income mo is now what? Dapat 500,000 yung correct. But because of the chain error, ang net income mo is 450,000. So understated yung net income mo, understated yung gross profit mo. And therefore, yung equity mo is understated rin. And therefore, in summary, kapag ang error mo is beginning inventory is overstated in period 1, overstated si beginning inventory, overstated si cost of goods available for sale, overstated si COGS. Dahil overstated si COGS, revenue minus overstated COGS will give you an understated gross profit, an understated net income, and therefore an understated equity. So, kapag mataas si beginning inventory, mataas si COGS, mataas si cost of sales, and therefore bababa si gross profit, si net income, and si equity. Next, what if ang nagkamali ka naman is si ending inventory, which is actually a lot worse. Ang ano yung tama? The ending inventory should be 200,000. However, ang ending inventory mo, ginawa mo 100,000. So ano to? Understated si ending inventory. Dahil understated si ending inventory, yung COGS mo, as you can see, 300,000 dapat, naging 400,000. So naging overstated yung COGS. So papasok, mag-chain error, overstated yung COGS mo. So yung 1 million na dapat, 300,000 lang isusubtract, naging 400,000 dahil 400,000 yung COGS dito. So therefore, itong COGS na to will give us a lower gross profit at 600,000. 600,000 na ng gross profit namin when it should have been 700,000. Then, kahit subtract the same amount of OPEX, our net income will be lower. Tignan mo, ito 400,000 but in fact, it should have been 500,000. So ano yung mga na-understate? Na-understate si equity at 400,000. And also, yung assets natin is also understated at 700,000 versus dapat 800. Bakit understated si asset? Because ending inventory is an asset. Your ending inventory is an asset. So dapat, our asset should be 200,000, kaya naging 800,000. But now that it's understated by 100,000, so again, ending inventory, bababa yung asset natin. Kasi kulang siya ng 100,000. So, itong 700,000, the missing 100,000, that it's 800,000, is the ending inventory. So therefore, that's just the first period effect. Anong problema? Dahil our ending inventory is understated, our beginning inventory for the next period is understated. So para lang siyang yung first period effect. Dahil your beginning inventory is understated, your cost of goods is understated, your COGS is understated. Because your COGS is understated, tataas yung gross profit, tataas yung net income. Tataas yung net income. tataas si net income, and therefore, overstated pa rin si, so si equity, hindi na siya overstated because nag-self-correct. Why siya nag-self-correct? If you can notice, yung net income mo is understated by 100,000 here, pero overstated ng 100,000 here. So, nag-offset lang. Kaya, yung equity mo will still be okay. So, yun yung effect ng ending inventory na understated. So, in summary, this is what happens. We start off with an understated ending inventory. Dahil understated is the ending inventory, our COGS will be overstated. An overstated COGS will give you an understated gross profit. Your understated gross profit will give you an understated net income. So in assets, liabilities, and equity, dalawa yung understated. The assets that's understated at 700,000 kasi kulang tayo ng ending inventory. And yung equity na understated na 400,000 because understated yung net income natin. Next, because our ending inventory is understated, our beginning inventory will now be understated, and our COGS will be understated, but now our COGS will be understated by 100. So now, baliktad yung mangyayari. Because understated yung COGS mo, tataas si gross profit, and therefore your net income will be overstated by the same amount. And therefore, yung equity, pareho pa rin yung ma-affect. So, wala nang effect in terms of your equity at 1.5 million. There. So, in summary, yun yung mangyayari. So, the last is yung pag-overstated. So, just follow the normal na dahil overstated si ending inventory, understated si COGS. Dahil understated si COGS, overstated si gross profit. Overstated si net income, our assets and liability equity will be overstated. Dahil yung ending inventory natin is overstated, overstated si inventory. Mag-understate, mag-overstate si COGS, and then mag-overstate si COGS. Because our COGS is overstated, our gross profit will be understated, our net income will be understated, but everything else will be equal. So, yun yung mangyayari. So, in summary, this is what will happen. If your beginning inventory is understated, these are the things that will happen. Beginning inventory is overstated, these are the things that will happen. Ending inventory is understated and ending overstated. So there are two types. Pag nagkamali ka sa period 1 ay period 2, isa lang yung effect. Yung mangyayari lang dun sa period na yun. Pero if nagkamali ka sa period 1 na ending inventory pa, it will cross over different periods. So please take note na if you have an ending inventory that's understated in period 1, it will most likely have a beginning inventory understated in period 2. If you have an ending inventory that's overstated in period 1, you will have a beginning inventory that's overstated in the second period. So let's practice. I think it's harder to imagine without the figures. So bear with me and then let's just finish this E611 problem. So correct error number 1. So number 1 raw is ending inventory of period 1 is overstated. So number 1, kung please be careful, tingnan nyo muna kung sino si period 1. It's 2011 and 2012. So our period 1 is 2011. Now, ending inventory yung mali. So itong 30,000 yung mali. Right? So let's see how to solve this. So one way is really memorizing this table or just follow the logic. So our ending inventory is overstated. So overstated, see 30,000. By how much? 3,000. So 3,000 yung overstated. Si 3,000 si overstated. So, ending inventory, if this is overstated, we have to subtract 3,000 para tama siya. Ano yung na-affect si 30,000? Well, our cost of goods sold raw will now be understated. Yung 140,000 is understated. So, to correct an understatement, we have to add back the 3,000. So again, itong 30,000 is overstated by 3,000. So how do we correct it? Subtract 3,000. Dahil overstated sa ending inventory, understated si COGS. Of what? Understated si COGS of 3,000. So to correct the understated COGS of 3,000, we have to add back 3,000. Doon na ba matatapos yung correction? No. The problem is, yung ending inventory mo of 30,000 is your beginning inventory here. So technically, your beginning inventory is overstated. This 30,000, alam natin should be 30,000 minus 3,000 to be correct. Now, ano yung other effect? Because the 30,000 is overstated, your COGS is also overstated by 3,000. So, dahil overstated si 205 ng 3,000, we have to subtract 3,000. And then finally, because your COGS is overstated, what else would happen? Your cost of sales is overstated. Yung 170 is overstated by 3,000. So that would be what? We have to, overstated by 3,000, so we have to subtract ng 3,000. So that's error number 1. Error number 2 is that 2012 ending inventory was understated by 6,000. So ano yung problema? Ito. It's understated raw by 6,000. So, what do we do? Dahil understated siya ng 6,000, understated siya, this is plus 6,000. And because this is understated ng 6,000, it means that our cost of sales is overstated by 6,000. So we have to subtract 6,000. So, ito na yung mga effects. So let's adjust. Ito yung base. So, itong 30 minus 3,000 naging 27. Itong 140, in-add natin ng 3,000, so naging 143. Itong beginning inventory, alam natin dapat 27 to. Our cost of goods sold that was overstated by 3,000, naging 202,000. Our ending inventory, naging 41,000 because we added 6,000. And then now your COGS, we subtracted by 9,000. So, ito yung correct figures. Then from there, we know that our adjusted cost of goods sold would be 143,000 and 161,000. So let's take a look at another example. So ano nangyari? The ending inventory at December 31 was overstated by 5,000. So what is the cumulative effect on the inventory on the total gross profit for the 2 years? So let's look. Ito yung itsura nila. Ano yung nagbago? We just have a gross profit extra. Pero alam rin natin na yung COGS nito is just derived from here. So, let's do. And let's analyze the problem. Ang nangyari is the ending inventory is overstated. Itong ending inventory of 44,000 in period 1 is overstated by how much? By 5,000. So, dahil ending inventory mo is overstated by 5,000, your cost of sales is understated by 5,000. And because your COGS is understated by 5,000, understated rin to ng 5,000. So therefore, your gross profit is overstated by 5,000. So aside from that, ano yung mangyayari? Dahil yung ending inventory mo is understated by 5,000, mali rin to. Your beginning inventory is overstated by 5,000. So we have to subtract 5,000. Next, your COGS will be overstated. So overstated rin to. So we have to subtract 5,000. Next, your COGS, therefore, is overstated. So we have to subtract 5,000 rin from 194,000. So what else yung effect? Dahil overstated si 194,000, we have to subtract 5,000 rin here in 194. And dahil overstated si cost of sales, our gross profit here would be plus 5,000. So now that we have that, we just adjust. So as you can see, yung 44 minus 5,000 naging 39. Yung COGS na 161 naging 166 kasi plus 5,000. So naging 166. Tapos itong gross profit that we subtracted 5,000 naging 44,000. And then itong 39,000 na ending inventory, yung beginning inventory natin naging 39,000. And then yung COGAS of 246 naging 241,000 kasi we subtracted the 5,000. And then yung COGS of 194 naging 189 because we subtracted 5,000 again. And then yung 189 nilipat lang natin here. And lastly, yung gross profit of 56,000, we added 5,000. So naging 61,000. So in essence, ito yung correct amounts. So our net income is 44,000 and 61,000. So what is the cumulative effect of the error? None. Because, why none? Why is the cumulative effect on the gross profit none? Because ito, understated by 5,000, pero ito, overstated by 5,000. So, 5,000 minus 5,000, 0. Nagsi-self-correct yung error. So, with that said, we're done with all the subtopics. The last is financial statement presentation. Just know that inventory is classified as current asset in that you have major inventory classifications, which is merchandise inventory, raw materials, work in process, finished goods. Basis of accounting, and then the cost flow assumption. Yun yung kailangan mong i-disclose. And then these are just financial ratios. So first is inventory turnover. So cost of goods divided by average inventory is equal to inventory turnover. And then inventory days to sell is just 365 divided by inventory turnover is equal to days to sale. So inventory turnover, better if higher. So if your cost of goods sold is 1,000,000, your inventory is 2,000. Cost of goods divided by your inventory will give your ITO of 0.5. And basically, dapat ang alam nyo lang is that if anything is missing, you'll be able to solve for it. So memorize the equation lang. Cost of goods sold divided by average inventory is equal to your inventory turnover. And then yung days to sell is just 1.5 days to sell is basically just talks about how long it takes to sell your inventory. So for example, 1,000 cost of goods sold divided by average inventory of 2,000, it will give you an inventory turnover of 0.5. 365 divided by 1.5 inventory turnover is your days in inventory of 730. So ito, these are just simple, straightforward equations na you just have to know just in case tanongin. And with that, we're finally over in terms of chapter 6 subtopic. So please study your inventory now. Be an expert in your inventory and preparation for your long exam. So I understand there are a lot of questions. So again, just schedule a consultation with me and then I'll be able to explain it. But from here, nabigay ko na lahat ng and everything that I can do. If you're still worried, I will conduct another session at Tuesday just to prepare for your quiz on Wednesday. So thank you so much, everyone, and good luck.